Three, two, one. Good morning, traders and investors around the world. Welcome to this Wednesday's edition of Pre-Market Prep Plus Wednesday with Wedbush. I'm going to be joined here in just a few minutes by Jay McCanless. He's the Senior Vice President of Equity Research, covering the home builders and buildings product sectors, and maybe he'll let us know when this rally may come to an end. S&P's down 13 handles. We covered that pretty close. Off the pre-market low. On the downside, we're looking at 1050. That's yesterday's low. On the upside, we're seeing if the bulls can get this market green. The buck tacking on 11 cents at 102.24. Bonds down a little bit less than a half a point. Major resistance just above 128. That's trading at 127 and 20-second, 30 seconds. Crude residing above 70, up 15 cents, 71.35. Gold in the red by 930, 1938.60. Silver under 23, now down 36 cents at 22.87. And Bitcoin having a good day, up $935 at 29,115. As I mentioned in the intro, we're joined by Jay McCanless. He's covering the home builders and related companies over there at Wedbush. And here's an analyst with a kind of easy job nowadays, huh?
Yeah, it's definitely between what we're seeing in the field, and then also we've had two very solid pieces of macro data this week. The National Association Home Builder Confidence Index, we saw that move up to 55, which any reading above 50 says that home builders are expanding and growing their footprint. What we also saw, more importantly, is that the traffic indicator, which is one of the sub-indexes that build up to the main confidence index, that traffic indicator was up month over month for the sixth straight month in a row. So even with these higher mortgage rates, people are still coming out to the neighborhoods. They want to buy homes, very much in line with what we heard from Lennar last week. What I think we're going to hear from KB Home, KBH, we're outperform rated on that one. What we're going to hear from them this afternoon.
And not exactly what the Fed wanted, right? The Fed wanted to boost interest rates, slow everything down. And what they did is they created an environment where you have kind of really diminishing supply, because if you're locked in at 2, 2.5, 3, 3.5, whatever rate it is, do you want to abandon that mortgage? Do you want to sell your house, take the profit on your house? First of all, what are you going to buy? And second of all, do you want to pay a much higher rate? So let's look at these things from the interest rate perspective. Is a couple more hikes really going to make a difference?
So I would say a couple things to point out there. On the supply side, the lack of existing homes, which are home builders' biggest competitor, that lack of homes has basically restored pricing power in most markets for the home builders. I mean, there's still some outlier markets where the builders are having to move base pricing lower, but by and large, we're seeing prices move higher. What's interesting too is the NAHB put a stat out about a month or so ago. From 2000 to 2022, about 10% of all home listed in any given month were going to be new homes. Now, with what you were talking about, people's hesitancy to move, new home listings are almost a third of total listings. So not only are the builders benefiting from having, say, more affordable product, we think they're also getting more shots on goal with the consumer, because now they're 33% of the listings versus historically being 10%. In terms of what the Fed's going to do, who knows? What we know is that the spread between 30-year Treasury or 30-year mortgage rates and the 10-year Treasury, which is what we monitor and watch, historically that spread's been about 140 basis points. Over the last 6 months, it's been about 330 basis points. So if we could get any relaxation there, and maybe move mortgage rates back down into the mid sixes versus sitting at about 7% right now, would certainly be helpful for the group. However, if that spread were to widen out, yeah, that, in the intro you talked about what could hurt the builders. Getting up into a solid 8 handle on mortgage rates certainly doesn't help. I think the other thing that we're watching is pretty basic. It's jobs, and the job numbers have continued to. We don't have a formal forecast on jobs, but continue to beat the consensus forecast and do generally better than people were expecting. But if we were to see things turn down there, that along with higher rates, I think could slow this rally or stop it in its tracks.
All right, let's get to some individual issues that you wanted to cover tonight, today. The first one, KB Homes. I believe this is an all-time high for the stock heading into its report. The old momentum of the market coupled with, people buying ahead of the print here. Tell us about your current rating, your price target, and is this due for a little bit of a cooling off period?
Sure. So our target is 55 on this name. I think it went out at 51 and change. And we're outperform rated on the name. The pitch here is that 65% on average of their sales, KB sales, go to first time buyers. That buyer, certainly got kind of frozen out during the fall of 22 and early 23. But now that, again, there's not that many existing homes out there for sale. And you look at what rents, even, and this is another thing the Fed didn't want to see, but we've seen rents on a same store and on a gross basis for multifamily continue to move up. And so for buyers who can find the 3% to 5% down payment, looking at new housing, whether it's a KB home or Meritage MPH, which we also like, those are names right now that should be benefiting from this lack of supply, especially as it relates to first time and affordable product in the existing home market.
Yeah. Oh, I'm sorry. Go ahead.
Oh, no, I was in terms of what we're expecting tonight. We are a little bit ahead of consensus from an earnings and an order growth perspective. But what we've seen from the builders in the March quarter reports, what we saw from Lennar last week, is that order growth and the order comp generally have come in better than what people are expecting. So, we think there's probably more upside than downside risk to orders when KB reports tonight.
All right, and so let's move on to Meritage Homes, trading at another issue, trading at an all-time high. Move up, consolidation, another move higher. Talk about your current rating and price target and the pros on the issue.
Sure. So our target on this one's 137. We're also outperform rated. This company generates about 85% of their revenue from first time and first move up buyers. Okay. They also have pretty solid market position from the West, Phoenix, SoCal, all the way east to Texas, and then pretty much all the Southeast. We like the fact that they're actually a little lower price point on average typically than say a KB home. We also like the fact that they've bought the land to have their communities. Communities are the same thing as like a stores for a retailer. They've bought the land to get the communities open and potentially sell more houses. I think both these companies also have benefited from having a good mortgage partner that's allowed them to do rate buy downs and other incentives, find ways to make the monthly payment affordable for the buyer.
All right, let's go to Lennar. I know that reported that blew it away. New all-time high yesterday. I don't know what. We'll go to it in a second with Lennar. What's holding the XHB down? Let's talk Lennar, and then I'm looking at this XHB, and I don't know. Maybe that was just too much fluff at 85. But let's talk Lennar, and then what's dragging down the XHB?
Sure. So we're neutral rated on Lennar, but I think the important thing take away from them for the group is we saw them increase their volume expectations for the full year. I think that was pretty well expected. What wasn't expected is they took up their gross margin assumptions for the year or for the quarter. And we think that's going to translate to a full year increase in gross margins. I don't think people were expecting that. And especially people weren't thinking that the builders could get pricing power back as quickly as they have. Again, that lack of supply on the existing side does a lot of good things for the home builders. So we feel like from both a profitability and a volume standpoint, Lennar was a great read for the industry. In terms of what's holding the XHB down, and I would also encourage people to take a look at the chart for ITB. That's another ETF. We don't cover it, but that's another ETF that's actually more home builder and building products focused. The XHB is something we also keep an eye on, but it also has retail in there, Home Depot, and I think Williams-Sonoma and some other retailers in there.
Okay. Okay.
My guess is some of the retail names may be weighing it down, not totally sure. But for the ITB, it's almost back to the highs that we saw at the end of 21, which was kind of the post-COVID peak for home builder stocks. What could push it through? I think, a good set of numbers out of KB tonight wouldn't hurt. We are expecting an earnings beat there. We've still got some more macro data to go. We get resales, I believe, tomorrow. New home sales comes out next week. So if we continue to see macro data come in much better than expected, like we saw from starts yesterday, and that confidence index we talked about, that could certainly help the ITB push higher from here.
All right, and let's go off the let's cover one more thing. This BLDR, I think I said that they have like a year of backlog or something. Do you cover this Builder's First Source here? Looks like tempting to break out here. Do you have a target on this one?
Yeah, so that one, our target's 130, and they are the country's largest supplier of lumber and building products. We think they have about an 11 or 12% market share of the domestic building products industry. They are also a key supplier for many of our home builders, Meritage, Horton, et cetera. We would continue to buy this name at these levels. We've never seen, at least in my experience with building products, we've never seen a company have this large of a market share and be able to get this type, we think, of both pricing power with their suppliers as well as pricing power with their customers. The other thing that they're doing is they're increasing their percentage of value-added products, which helps the home builders and their subcontractors take labor out of the field. And if you listen to any of the recent builder calls, they'll talk about how labor is still in short supply for pretty much every part of the build cycle. So if companies like Builders First Source can help them remove the necessary labor in the field and get these homes built a little bit quicker, I think the stock should continue to work. So this is a name we like a lot and covered it for many years.
And you talked about the some of the retailers. Now, I know you don't cover Home Depot and Lowe's, but don't you think that these stocks would be acting a little bit better? If you don't want to comment on them at all, but I mean, you need the supplies, right? What do you think? You think something like Builder's First Source is just, with the approach to it, that they're taking business away? Because these stocks have participated in the rally, but nowhere near all-time highs.
Yep. So because Builders First Source, we think somewhere between 12 to 14% of their revenues actually come from the repair and remodel market. So comfortable talking about it to that extent. I don't know that they're necessarily taking business away from Depot, but we know that repair and remodel was a big business for Builders First Source last year. Sounds like it kind of tailed off in the fourth quarter, not a surprise there, and then a little bit in the first quarter. I think, again, going back to people not wanting to move and not wanting to swap out a 3% mortgage rate for a 7% mortgage rate, we think that the tailwinds long-term for R&R, whether it's the retailers you mentioned or Builders First Source, we think the tailwinds are certainly out there. And as long as the job picture holds up, because historically, the job picture, along with home price appreciation, which home prices on a national level seem to have bottomed and are starting to move back up, those two things will help R&R spending increase. And we think Builders First Source should certainly benefit from that.
And this is probably not in your area of coverage, but Zillow Group, I mean, of course, it had its ridiculous run in 2020 and 2021. Do you think people are just sticking with your traditional paying that higher commission, and or is there perhaps, like I said, if you don't cover us, you don't need to comment, but don't you think this the Zillow would be acting a little bit better?
Well, we do cover it actually, and I'm neutral rated on it.
Okay.
Zillow and Redfin, which we also cover, neutral rated on. they both gapped higher immediately, like the first, call it 30 days of 2023. And then they've moved up a little bit since then, but not much. I think the big problem and what the bears always push back on both these names is how do you grow market share when there's so many competitors out there? Because Redfin and Zillow's core business is still the traditional selling a home, getting some commission on it as an agent, and then upstreaming part of that commission to Redfin or Zillow. How do you gain share with so much competition out there? And B, and this is more our thinking, does it really make sense to increase your CAC in a declining market or in a very tight market to drive more volume and drive market share? I haven't really seen a good answer to that question yet from either of those companies. I will say for Zillow, some of the ancillary services like Showing Time, which is a fee service that they're starting to roll or have rolled out already. I think that's an interesting software product, not big enough to be a line item, certainly at this point, but I think some interesting innovations like that. Also, their partnership with Opendoor, which we're neutral-rated on. The fact that basically Opendoor is going to use their search engine or their search algo to help find homes. And then if it's a Zillow directed contact going to Opendoor, Zillow is going to make some money on that. We like that from the perspective of iBuying can work in certain situations. And if Zillow can do it without the risk to their balance sheet, so much the better. But all these little ancillary things, which are getting better, aren't big enough to offset the fact that existing home sales and most likely, revenue to the core of Zillow's business and Redfin's for that matter. It's tough to see how revenues grow meaningfully, just given how tight existing home supplies are and with the declines we've seen year over year in existing home sales.
And what I remember that you gave me back in October of 22 when you had John was Tri-Point Homes out in the California area. That stock seems to be firing on old cylinders here, having a good year. Can we expect any more potential upside in Tri-Point Homes, TPH?
Yeah, that one has moved past my target. I would say in the interim, what's good for Lennar and KB is probably going to be good for Tri-Point. That's a name certainly we need to reevaluate our target and do some more work on. But at this point, if you look at KBH, MTH, those are some names we can tell you to go out and buy today. And certainly next time around, we can revisit TPH and talk about it a little bit more.
So what do you do when a stock goes past your target? Do you just say, man, there's nothing I can do and just let it go? Would you, do you try and buckle down and come up with a new one?
What we've been thinking is we wanted to see some hard data from the home builders, both Lennar, and then we're going to get KB tonight. And at that point, reevaluate, revisit some of our targets. And the interesting thing that's happened this year, and this isn't stock specific, but the interesting thing that's happened is that we've seen buyers from entry level to first move up to luxury. You can look at Toll Brothers report a couple of weeks ago. Buyers across the price point spectrum have all been out and are looking for houses. So that, I think, if we should have been more bullish for a reason, that was it, that we've seen demand come through from all these separate buyer groups. And so assuming that continues for the next month or so, couple months, I think that's going to be good news for the group, but it's certainly, as opposed to when you and I visited in October, when nobody was buying homes, it's a much better backdrop and scenario for the group at this point.
Like being a contrarian investor. One interesting one, don't know if it's in your area coverage, and I haven't looked at this stock in a long time. If you need insulation, you're getting it from Owens Corning. Any comments on OC trading in at all-time high?
We don't cover it, but I would just say broadly, if housing starts are finally kicking into a higher gear, which the report yesterday suggests that's happening, I would think any of those building materials companies that are highly leveraged to housing starts, whether it's on the insulation side, drywall, BLDR, that's 75% of their business is single family starts. If you have the conviction that single family starts are moving back up to more normal monthly levels, that whole complex of stocks should benefit from that.
Jay McCanless, Senior Vice President of Equity Research, covering the home builders and building product sectors in an excellent fashion. Jay, we had you on October 22, and the charts really tell it all. Jay, thanks for having me. We'll talk to you again soon.
Sounds great. Thanks. Appreciate it, Joel.
All right, S&P's just making sneaky lows here at 1850. That's 1850. As I mentioned, we'll be focusing our focus on the downside. Comes in at yesterday's low at 44.10 on the 50. On the upside, I'm going to have to see what mid-range is on the session, and they're making it easy for me because 38.50 high. 1850 low. Mid-range gets you back at 2850. Above 2850, well, we'll see if we can get back to that closing price of 34.75. That's just below your pre-market high at 38.50. I'm glad you guys enjoyed that interview with Jay, and we got some good stocks coming out of the Thinker, and the Thinker is thinking about Boeing. Now, this got tagged yesterday, and didn't I see some news about that they got a bunch of orders from China or something? Well, they sold the news on this one. It just doesn't like this 220 area. It hasn't liked this 220 area since February of 2023. Actually, if you go back to February of 2022, you topped out at 223. These are monthly highs. Let me switch the charts up here. I'm going to keep it there since no one complained yet. But bad day yesterday. You got an important level on the downside here in a red tape. This 212 area, this look a little heavy to me. 212.05, that was your low on June 8th. 211.88 represents your low from yesterday's session. If you can find support between this low at 207.20 and 212, you let me know. On the upside, you need a SPOO rally. You need to get back above that closing price. And then it's kind of hard pickings on the upside. No daily high into 1929, 76 under the double close at 1941, 1999. So if you're looking to sell this at a pop, maybe tune in on some of your shorter term charts. GOLD, as Barrett Gold. I mean, these stocks are just out of favor, down 6 cents. Not much here. Low of the move. This is just doesn't move. Next daily low comes in at 1583. There's only one low there, dangerously close back to the low of the move. Maybe you have some institutions step up here at 16. Doesn't look like it right now with gold in the gutter down 840. Nothing looking good there. PLTR, I was asked about that one during the pre-market show, and this is a couple warning candles had been fired. The first warning candle was on Friday when it posted the high of the move, open 1687. Go back and look at how many of your stocks opened right at their high, 1687, 1691. Didn't post your closing high for the move that day. What it did, did that the previous day, 1660. So this is breaking down a little bit. My area of interest is on the downside, is holding these pair of lows at the 1450 area, going back to the 14th and the 15th. Coming back on the upside, maybe people are going to start ganging up on this single at 16. If somehow it could, just because it's a round number and really, underneath, looks like you had sellers at 17. That's a stock peaked at 1670. 1679 and 91. So, but a target on the upside, 1630. That's what I'd be looking at. That was your close from Friday. High close of the move comes in at 1660. It's 928. You know what that means, guys. That means we're going to wrap things up today on Pre-Market Prep Plus. Hope you enjoyed Mr. McCanless with his pretty accurate calls here. Like I said, we're gonna wrap things up. We'll be back at 3:30 p.m. and I think good old bullish Todd Gordon is going to join us on the closing print. Everyone have a great day. Be safe out there.